Good afternoon, preppers. Welcome to Goshen Prepping. As we are recovering from the bank failures and people are starting to breathe easier, it is no time to breathe easy because the effects are still catastrophic and still rippling. Jump to our first article from USA Today. Silicon Valley Bank collapse. More shutdowns could come, BlackRock CEO Larry Fink warns. And if BlackRock's involved, we're definitely going to be seeing more collapses. And that's the whole thing, is banks don't fail all the time anyway, simply because of lack of funds. It does happen. But it's simply just people's thoughts of the lack of funds. They make runs in the bank and down they go. What's interesting about Silicon Valley is 96% of the people who had accounts there were actually above the FDIC limit. Okay, real quick, if you don't FDIC, when the Great Depression happened, people lost a lot of money. The banks simply didn't have the cash. And so to try to make more stability in the banks, the feds actually introduced FDIC insurance at all credit unions and banks, making it so if you actually had deposits that were $250,000 or less, you get your money back. And sure enough, people at Silicon Valley, the 4% of people who actually had the money less than $250,000 got their money back. Not the case, at least through FDIC, for the people above the 4% or above the 250,000. But those 96%, are they out of luck? No. Dangerously, Biden signed it, so they're actually getting money as the government gives them money. It's such a bad move, and I'll talk about later on in the future why that happens. But ultimately, what it does is this. The banks, if you don't want your bank to go bankrupt, if you don't want your business to go bankrupt, what do? You actually have people on staff to make sure you don't go down paths you shouldn't go down. I mean, let's put it bluntly. Banks could easily just loan out to everybody and try to become incredible billionaires or trillionaires, but they have to be careful because a lot of people will default on those. So you often have like security officers to make sure that doesn't happen. Silicon Valley didn't even have one. And they were completely just crazy doing this, putting out these loans to people, multi-million-dollar, even billion-dollar holders there, just giving out money like it's nothing, and it caused the bank to collapse. So by simply bailing them out, and that's what it is, by the way, our government bailed them out and said, never mind, we'll take care of you, is simply just saying, hey, message to all you other banks, do whatever you want to do, because you know what, we'll take care of you. Or is that the case? Because you have to understand that some of those major corporations that actually kept their holdings at that bank, billion-dollar holdings, were Chinese companies. And it's very interesting how Biden was quick to actually forgive these loans or basically give this money back to them because they're Chinese holdings. It goes quite deep as far as the real reasons behind why our government's bailing them out. But that's not the problem that we're looking at specifically. It gets much worse. Top Wall Street economist says Fed rate hikes are done as bank crisis intensifies. So as you may or may not know, whenever there's actually high inflation, the feds will actually increase interest rates to try to stifle down the economy, make it so people can't spend as much money, etc. Again, that's a problem because guess what? People are not going out buying extravagant things. They're actually just trying to make ends meet. Over half the population in America doesn't have anything in savings. And so therefore, any type of interest rate hikes actually stifles the economy? No, it actually makes it difficult to simply live with simple things. Now, what they're saying is since these banks are starting to fail, the feds are like, okay, hold on, we better back off, and maybe we won't actually have any interest hikes at this point, hopefully making it so more banks won't fail. Except here's the true consequences from Business Insider. Stocks will tumble if the Fed pauses rate hikes, because guess what happens? It means other banks are about to collapse. That's actually DataTrek research. Remember I told you, banks simply don't fail because of deposit problems, but often they will fail simply because people lose their belief and security in that bank. And the feds, by stopping interest rate hikes, are basically saying, hold on guys, we don't want more banks to fail. That gets wind to all the account holders and they're like, the feds are doing this. They think more banks are going to fail. Time to start pulling out money. This action alone could actually cause more banks to fail, and it probably will. And our last article, Dr. Doom warns that a contagion from U.S. bank failures and credit problems could easily spread globally. And I won't get into Dr. Doom as far as who he is specifically. Maybe in the future we'll talk about him. But basically, he has a very pessimistic view on the economy. I guess I do too. Maybe you do as well. And honestly, I like to look at the pessimistic stuff for the fact that I want to be warned of what potentially might come instead of thinking everything's all cherry blossoms and roses. It's not. And what he's saying is because of this whole situation, especially with the feds, we're looking at literally banks starting to fail globally. And we're now suddenly being put back into 1929, where now we're looking at not just a depression in the United States, but a global, worldwide depression, which led to World War II. Do you see the ramifications of this whole action? So listen, we're preppers. We need to do what we can. I've already said before, if we even start looking at banks failing, I'm going to tell you right now, probably, I don't think you probably have more than $250,000 in your account. You'll probably get your money back very quickly because of FDIC. But that's not really the point, is it? If 96% of the holders of Silicon Valley were major corporations are going down. If major corporations going down, the entire economy of the country, or from Dr. Doom, the entire world economy is going to crash. This literally, as I said before, could easily be the first steps of us heading into a greater depression, one far worse than the first one. So it's not simply about taking your $1,000 out of your bank account. It's about having things stockpiled, because you understand that a lot of people starved during the Great Depression, even more from famine and starvation in World War II. What's it going to be like this time around? So have your stockpiles ready. Keep stocking up, everybody. Try to do what you can to prepare for this, because from all these indications, bad times are certainly coming.